Fair value gaps are like optical illusions. Once you see the optical illusion, you can't unsee it anymore. At first, when you open a chart, you might only see candles. But once you understand that candles in itself are actually also fair value gaps, you won't be able to unsee it. It's like trying to outrun oxygen. You can't. It's everywhere. Fair value gaps are everywhere in the market. Now, just like oxygen, it's not a bad thing because these fair value gaps allow us to also be traders. Now, let me show you how that happens. But first, you need to understand that essentially in trading, you need two things. First of all, you need a bias. And a bias in trading is your direction. So are we going higher or are we going lower? Now, historically, if we take a look at this price action, then we see if we are going to continue higher, what happens as a byproduct, we create bullish fair value gaps. If we are going to continue lower, what happens as a byproduct, we create bearish fair value gaps. That always happens. It's a fact. So these fair value gaps in itself tell us a direction. In other words, the bias. So that's number one. But number two is, then how are we going to deliver towards that bias? So if we are going to be bearish, then how far can we actually retrace before we are going to continue lower? Now, you guessed it, that's also fair value gaps. Now, before diving deeper into that, I want to open your mind a little bit because individual candles are also fair value gaps. This is what we call in the MMT candle science. And candle science is purely based on the understanding of fair value gaps. A fair value gap is again that 3 candle pattern, right? For example, this right here is a bearish fair value gap. So people, when they see these candles right here, they might assume, well, there's no fair value gap right there. And you would be correct, but you're also not correct. Because if you go down a time frame, for example, to the daily time frame, then those bearish candles, what do they turn into? They turn into bearish fair value gaps. And if you take a look right here at the daily time frame, and for example, take a look at this daily candle. And this daily candle is respecting and rejecting from this bearish fair value gap right here to then continue lower. So this wick on the lower time frame, what is that? And that body on the lower time frame, what is that? Well, if we go down time frames, we see what was originally a daily candle turns into, again, fair value gaps. And on the 1 hour time frame, you could now do the exact same thing with, for example, this fair value gap. Once we have this large wick right there at the top, so we are respecting this fair value gap, that large wick at the top tells us that that is lower time for fair value gaps going higher to then continue lower. Whilst the expansion, so just down candles in itself right there, are simply fair value gaps getting respected and simply continuing lower. So every single candle tells us a whole individual story as well. Now, if we combine that with regular fair value gaps and the time frames, then we can get to a very interesting understanding. So the goal right now is, first of all, to figure out what is our bias. So understanding what is the overall direction. Now, if we understand right here the monthly time frame, then we see we have a large bearish fair value gap right there, which we can potentially continue lower from right there. Once we trade back into that bearish fair value gap, we struggle overall a little bit, but we do create these bearish long wicks at the top. Again, what are those long wicks at the top? Those are, again, those potential reversals right here. Now, then we see that we are creating multiple consecutive down candles. And if we go into the weekly, this is supported by the idea, again, that we are overall moving lower, creating not only long wicks like we see right here, but also those down candles again. And like we just discussed, those down candles are fair value gaps on the lower time frame. So we can get to a conclusion that we are moving lower, essentially, and that we might be targeting, for example, this swing low right there. Now, when we then take a look right here at this bearish daily fair value gap, that can be step number 2 of what we need. That can be our narrative area. Our narrative area, in other words, is again, how far can we actually retrace right here before we continue lower towards our main target. So if we are going lower, then where are we going lower from? Now, that's this fair value gap, but it's also a little bit more nuanced than that, because if we go into the 4 hour time frame right here, then what did we go over earlier? We said that the individual candles right here are also fair value gaps. So a new week opens up right here. And when this new week opens up, we don't necessarily have a very clear fair value gap that we can continue lower from. We do have a swing high right here, but if you pay attention to the details, then we have a lot of things to work with. Because first of all, what happens right here at this moment in time? We try to push higher right here. where we create a potential fair value gap right there. Now, from this fair value gap that is potentially created, we also have this wick at the top, which I want you to pay attention to. And what should happen if we don't want to create this fair value gap? We should trade back into the first candle high right there. So when the next candle does something like this, large down candle, then what is that on the lower time frame again? That's fair value gaps on the lower time frame right here, telling us that we might be bearish. And since on the 4 hour, we now failed to create this bullish fair value gap, if we fail to create a bullish fair value gap, what does that tell us? Well, that usually tells us that since we are not creating that bullish fair value gap, the momentum is also not bullish anymore. And instead, with a large down candle, it turns bearish. So if we go into the 50-minute time frame again, then what do we see? That we have these bearish fair value gaps right here. These bearish fair value gaps right there are getting respected right there. And we create new bearish fair value gaps right here that we can eventually continue lower from. And when we continue lower from it, we still had in mind our main target is to be bearish. So we have this main low, and we also have, for example, this low right here, which was our main target. To then eventually, potentially, target a 1 to 2 RR right there to then continue lower. Now, this is not just any trade, because this is actually a trade that I also took personally, but this is then essentially how fair value gaps in itself essentially tell you everything. And what we see on the lower time frame, again, it's this inception of fair value gaps, where the fair value gaps tell you the direction right here, but the individual candles don't ignore them because they are also fair value gaps. Where this long wick respecting this fair value gap is also on the lower time frame. What? It's also fair value gaps. And that story of both the fair value gaps itself and also the fair value gaps seen through those singular candles, that leads us then to eventually take a trade like this right here, covering highs, targeting a 1 to 2 RR. And this trade, by the way, is not just any trade, because this is also a trade that I actually took. And that is mainly based on the logic of simple fair value gaps. All right, perfect. Thank you.